Working capital management has gained the attention of industry and academia as an exclusive area of study after liberalization of Indian economy. The profitability of any business to a larger extent is affected by this source of finance. Due to efficient management of current assets and current liabilities, managing working capital has become more important and critical in the modern scenario. After completion of this course, you're expected to have a solid understanding about the working capital management, operating cycle, and how to get the funds for working capital through various sources available in the company. So without any further delay, let's get started right away. If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoy this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions and I will respond to your comments.
Hi, welcome to this video on working capital management. I think so you have heard this word so many times, okay, while your academic backgrounds or in the companies, you have heard this term called working capital. This working capital is like a blood for the organization or to the business. The blood, how it is important for the human being, like that, the working capital is very, very important for the business, for their day-to-day expenses, and how the companies are going to managing this working capital effectively and efficiently. Okay, that we are going to discuss in this session. So first we'll look at the agenda. Introduction to working capital. We will discuss the meaning and definition of working capital and the working capital management. We will discuss objectives of working capital. So what are the main objectives or major objective of this working capital in an organization? Next, importance of working capital management. So what is the importance or scope of working capital management in an organization? That we will discuss. Next, aspects of working capital management. What are the different aspects of working capital management or working capitals are there? That we will discuss. Types of working capital. So in this type working capital also we have different types. So we will discuss what are the different types of working capital. Factors determining or influencing for working capital. So what are the internal factor, external factor, which affects or it influence for the organization to get the working capital? That we will discuss. Next, operating cycle. So this working capital is depending on the operating cycle. So what are the different stages are there in that operating cycle? All those things we will discuss. Formula for calculation of this working capital management or working capital. So what is the formula to calculate that working capital? That we will discuss. Sources of working capital. So for the companies, what are the varieties or what are the various sources are available for the working capital requirements? That we can see. Next and the last is how to manage working capital. So how the companies will manage the working capital in the organization or in their day-to-day operations, that we will see. Okay, let's begin with the introduction to working capital. So in simple words, the working capital is nothing but in general terms, what are the money required for day-to-day expenses or for the operating activities the company required, that we call it as working capital. Correct? So working capital is described as the capital which is not fixed, but the more common uses of the working capital is to consider it as the difference between the book value and book value of current assets and current liability. So this working capital, it is not a fixed capital. If you look at the whatever the other capitals, that is share capital or whatever the own capital is there or borrowed fund, that will be fixed, correct? But this working capital is not fixed in nature. According to the company's requirement or day-to-day activities requirement, they are going to take this working capital. It is not fixed. It is fluctuation in nature. Okay, it will not remain same for all the 30 days in a month or it is not same for all the 12 months in a year. So it is fluctuating depending on the activities of the organization. And it is very easy to calculate what is the working capital. That is the book value of the current assets minus current liabilities. Whatever the current assets are there, we need to deduct with the current liability. Then we will get the working capital. Working capital is another part of the capital which is needed for meeting day-to-day requirements of the business concern. I have already told you the day-to-day activities or operational activities, or for day-to-day expenses, the company requires some money. That we call it as working capital. For example, payment to creditors. So the suppliers, they are going to give goods on the credit basis, correct? So after 35 days or after 40 days or after 45 days, we need to repay the money for the suppliers or vendors, correct? So we need to repay that money. For that, we require working capital. Salary paid to the workers. So some companies, what they are going to do, they are going to have the weekly wage. Weekly wise, they are going to pay the wages. Or some companies, what they are going to do, per month they are going to pay the salary. Monthly wise they are going to pay, correct? So according to that, they require this working capital. And some creditors, they are not going to allow credit period. They need to pay cash and they need to purchase the raw material. For example, the ancillary service products, not the main raw material. Only for ancillary service products or service raw materials, what they are going to do, they are going to purchase in a small quantities. So what they are going to do, they are going to pay cash and they are going to purchase that raw material. So for that also, they require this working capital and etc. It's like for printing and stationery or for any petty cash or for any refreshments. Okay, for that, they require this working capital. Normally, it consists of recurring in nature. In the organization, it is day to day, it is required only in one or the other way. For example, every 30th or every month end, we require money for paying the salary and we need to pay the rent. And if it is purchased any assets on the basis of hire purchase, so we need to pay the EMI, electricity bill, water charges, printing and stationery. For other, so many other expenses will be there in the organization. So to meet that expenses, they require this working capital and it is recurring in nature. It can be easily converted into cash. Hence, it is also known as short-term capital. So they can easily convert into cash. That is, all your current assets we easily and quickly we can convert into cash. That is the near to cash, correct? So that is the introduction to your working capital or brief introduction about your working capital. So next, we'll see what is the meaning and definition of working capital. So working capital management is an act of planning, organizing, and controlling the components of working capital like cash, bank balance, inventory, receivables, payables, overdraft, and short-term loans. So it is an act of recording. That is, first we need to plan the working capital, how much we require per month based on the previous year or based on the previous months, how much working capital the company taken or they have consumed, correct? Based on that, they need to take the estimation or they need to forecast and then they need to plan for this month or for this quarter how much working capital is required. That is the first one we need to plan. Second one, we need to organize the money. So once we done the planning, next we need to organizing. So we need to organize the funds. So how much is required? That is, we have already planned, correct? So how much is required? That we have one estimation amount. So that amount, whichever the sources are available, so from that source, the company needs to organize or they need to pool the money for this working capital requirement. And controlling. So once they planned and organize the money, after that they have to control that money. Otherwise, it will be underutilized or it may be overutilized. So they need to control over the funds. So components of working capital like cash, bank balance and inventory, receivables. So these are the current assets. and payables, overdraft, and short term loans are the current liability. So, current assets minus current liability, you are going to get the working capital, correct? So, we need to maintain or we need to manage these current assets and current liability. That is the working capital. Next, according to the Weston and Brigham, working capital refers to a firm investment in short-term assets, cash, short-term securities, accounts receivables, and inventories. So, in a simple manner, they are given that all about your working capital is your current assets and the current liability. Managing effectively and efficiently in the organization. Whatever the current assets are there, current liabilities are there. That is the working capital. If we manage in a proper way means we can easily or smoothly they can go with this working capital. Next, we will see what is the meaning and definition of working capital management. So first we have discussed about what is the working capital and what is the meaning and definition of working capital. Next, we will see how to manage this working capital in an organization. So if we use or if effectively or efficiently use the working capital in an organization, then only the all the activities will go smoothly. Correct? So we'll see what is the definition and meaning of this working capital management. Working capital management is concerned with the problems that arises in attempting to manage the current assets, current liabilities, and the interrelations that exist between them. Yes, it is very, very difficult. So, with our notice or without our notice also, sometimes the current assets and current liabilities, the requirement will arises due to overproduction. Okay, we have get this working capital requirement or due to some other reasons, due to this pandemic or whatever the reasons. Okay, the current assets and current liabilities will be arises. So on that time working capital is also decreases because the difference between the current assets and current liability, that is called as working capital, correct? If we get the positive difference, yes, we have the fund. If it is negative, then it is deficit, correct? So on that time, the managing these assets, that is current assets and current liabilities, that is very, very difficult and challenging job in the organization. Working capital management is a business strategy designed to ensure that a company operates efficiently by monitoring and using its current assets and current liabilities to their most effective use. So using the current assets and current liability, sometime seasonable products will be there or seasonable raw materials will be available. So on that time, yes, the company needs to invest more money on the raw material because in that season only they are going to get the raw material. After that season, okay, once it is a off season, they are not going to get the raw material. So on that time, they need to invest huge money on the raw material, purchasing the raw material, transportation, and bearing the whatever the other expenses included in that. Okay, so working capital management is a business strategy designed to ensure that a company operates efficiently by monitoring and using its current assets and liabilities to their most effective use. So that is effectively and efficiently, if they use these current assets and liabilities, then only they can easily manage the working capital in the organization. Otherwise, it is very, very difficult. So they need to monitor each and every stage or each and every activity they need to follow, and then only they need to get this control over this working capital and they can easily manage in the organization. So that is the meaning and definition of working capital management. Next topic, objectives of working capital management. So what are the major or main objectives of this working capital management? We'll see one by one. So first one, balance of working capital. So managing or balancing the current assets and current liability in a stable manner. Okay. So for example, first month in a financial year. So if it is the current assets and current liability, it is 1:1. Okay. So next we need to maintain at a 2:1. So in that balancing of that working capital or balancing of current assets and current liabilities, that is the most important objective of this working capital. So if they manage the current assets and current liability or balanced the assets and liabilities means that will be the clear for the working capital management. So that is the first objective of this working capital management. So as per the current ratio, the standard ratio is 2 is to 1. If the current assets is 2 means the current liabilities should be 1. Then only the ideal ratio or standard ratio or soundness of the company is good. Okay. So they need to balance this working capital throughout the year. Next, that is second point, expansion of company's investment. So if they maintain in a very good manner or in a systematic manner in the working capital means that whatever the surplus fund will be there. For example, they are maintaining 10,000 rupees every day for the working capital. So if they manage properly, then whatever the other investments or other extra funds will be there, that they can expansion of their business. So addition to that, they can start a new product line, or they can expand, or they can start a new branch, or they can start a new plant and machinery, or they can install new equipments to the organization. Like that, they need to do some expansion activities. Okay, that is the objective of this working capital management. Next, third point, healthy relation with supplier. What do you mean by this healthy relation? Healthy relation is nothing but they have some good relationship or good rapport with the suppliers. For example, the company is going to purchase goods on the credit basis means the supplier is going to allow at least minimum of 15 to 30 days of credit repayment period. So within that period only they need to repay, or on that day only. 15 days if they allow means on that 15th only we need to repay the money. If you are not going to repay, then next time, if you are going to purchase the same raw material from the same supplier, they are not going to allow 15 days. They are going to decrease, or they are going to increase the whatever the discount rates they are going to give, that they are going to increase, or in the raw material price they are going to change. Why? Because you are not going to pay on time. If you are paying on time regularly means they are also going to give some discounts, cash discounts or trade discount, other things will be there. So they are going to allow for the organization. So if we manage the working capital properly means then we can easily maintain this healthy relation with the suppliers also. The suppliers also called as a creditors, one who given goods on the basis of credit to the organization. We call it as creditors. Okay, so we can maintain very good rapport with the creditors or with the suppliers. Next point, optimization of working capital management. So optimization is nothing but so we need to minimize the working capital. Whatever the required money for the organizational day-to-day expenses, as much as possible, we need to minimize the expenses. Either it may be on printing and stationery, or towards the purchase of raw material, or towards the transportation, any other thing. Okay, as much as possible, we need to optimize, and then we need to manage the working capital in a organization. Next point, that is fifth one, minimize the cost of capital. You know the meaning of cost of capital? I think so. Okay, cost of capital is nothing but what is the return on their capital. If for example equity share, how much is the cost of capital for the equity share? How much is the cost of capital on the debts, preference share, retained earnings? Okay, so what is the return on the investment? That is the cost of capital. So how to minimize this cost of capital? So with the proper managing the working capital in our organization, so we can minimize the cost of capital also. So if you minimize the cost of capital, so whatever the money you are going to pay for the shareholders or for the debenture holders, that money you can save and you can use it for the expansion of your business. Correct? So minimizing the cost of capital is also one of the objective of this working capital management. Next, assist the business to avoid over borrowing. So if company they have the very less current assets and they have more current liabilities. So they require working capital. So on that time, what they are going to do? They need to go and borrow the money from the other, whatever the sources are there, whether it may be from bank or financial institution or from any other. Okay, they need to borrow the money, correct? So if they are not managing properly the working capital means, then they have to go for this borrowing. So if they maintain properly, then they can over borrowing, they can avoid in the organization. So, and the last point, optimal return on current assets. So, whatever the current assets are there, how much you are going to invest on that, you are going to get the optimal return. That is maximum return you are going to get from the current assets also. So, whether it may be on bank balance or inventory or accounts receivable or bills receivable, all the other things, whatever the current assets are there, on that you can expect a good return on your current assets. So these are the few objectives of working capital management. Next, importance of working capital management. So is there any importance the working capital management in the organization? Yes, it is very, very important in the organization to manage this working capital. So we'll see one by one what are the major importance of this working capital management. So first one, higher return on capital. So if we effectively utilize the working capital in the organization means, in return we can get the more return on our investment. So all the business or all the activities they are going to do for the purpose of making money or earn a profit, correct? So here also if we manage the working capital in a good manner or in a systematic manner means, yes, we can get the more profit also. So gross profit, net profit, surplus, all those things we can increase only with the managing the good working capital in the organization or managing properly the working capital in an organization, so that we can get the more profit or we can get the more return on our investment. Next, improved credit and solvency. What do you mean by this credit and solvency position? Credit is nothing but the whatever the money we are going to borrow and we have the capable or we are able to repay that money, that is credit repayment capacity we can increase. When it comes to individual, how we are going to measure the credit repayment capacity of an individual means the CIBIL rating. So what is the individual CIBIL rating? For example, my CIBIL rating, okay, how much I can borrow and how much I can repay, that CIBIL will give the number. Okay, according to that we have the CIBIL ratings or whatever my past records are there, on that calculation the CIBIL is going to give the CIBIL rating. Like that, companies they will get the credit rating from the credit rating agencies on the particular instruments, on the shares, debenture or any other things. Okay, so how much they have the credit repayment capacity, okay, that we can improve. Next, solvency position. Solvency is nothing but the company can easily convert that money into cash. Okay, that is also we can improve. Next, third point, higher profitability. So we already discussed higher return on capital, correct? So how we are going to get the higher return on capital? With the improvement in the profitability, correct? So if we manage good or effective managing working capital in an organization, in return we can get the good profit in the organization. Next, better liquidity. Liquidity is nothing but easily we can convert into cash. For example, inventory or stock that we can easily sold and we can get the money. Next, accounts receivable or bills receivable. We also call it as a bills receivable, correct? So how much the debtors they need to repay the money, that we can give it to the financial institution and then also we can get the money, correct? Like that, for the managing this working capital so that we can get the better liquidity also. So uninterrupted production. So if you don't have the working capital, or if it is negative working capital is there, then it leads to the interrupt the production process also. Because for each and every production stage, we require this working capital because we need to pay wages, we need to pay rent, electricity, water, coal, fuel, gas, ancillary service products, so many. Okay, so for that we require this working capital. If we are not properly managed in the organization, yes, it may leads to the interrupt the production process also. So this is also very very important. So if something happens to the working capital means, then it will affect our production activities also. So we need to manage properly in the organization. Next, sixth one, competitive advantage. So how we can get the competitive advantage? For example, if we have the good or proper utilization of working capital means, we can go ahead with the good number of units production, or we can increase the production capacity also. Correct? So if we get the more production, so what we are going to get? We can easily sell our goods in the market, or we can supply our goods to the customers, or wherever the demand is there on that particular segment we can send the goods. So on that time the competitive advantage we will get, and more number of goods you are going to produce at a same fixed cost, then your cost of production will be lesser, so that we can reduce the MRP price also. Okay, so last one, that is seventh point, appreciation of business value. So with all these 6 points, the company can achieve this appreciation in the business value, or they can increase the net worth of the organization. Okay, higher return on capital, so that all the shareholders or all the public also, they have interested to invest in our company. Why? Because we are going to pay higher return on capital, so they are ready to invest their money. Improved credit and solvency. If you have very good credit and solvency position means, we can easily get the raw materials on the basis of credit, or all the financial institution, they are ready to lend the money to our organization. Higher profitability, it leads to good increment, hike to the employees, or other activities also. Better liquidity, uninterrupted production, so competitive advantage. So all these 6 points will gives very good return on our business value, or that is net worth of our organization, that is also can be increased. Next topic, aspects of working capital management. So these are the three very very important aspects of this working capital management. This is also called as main elements of working capital management. So if we manage these three properly or in a systematic manner in the organization, so we can easily achieve all the other things. So first one, your accounts receivable. It is also called as bills receivable. Accounts payable is also known as bills payable, and inventory management. So accounts receivable, so one who purchase goods from us on the credit basis, and they need to pay the money to our organization. The debtors, okay, they need to repay the money, so that we need to manage properly. And second one, accounts payable, that is what we need to repay for the others, that is for our creditors or suppliers, or to the loan. Okay, we need to repay, correct? So that we need to manage. And the last one, inventory management. So all the production activities or sales or marketing, everything will be depending on this inventory management. So how good the company is managing the inventory in the organization, so easily they can reach all the other activities in an organization. So these three are the aspects or elements of this working capital management. So next one, types of working capital. So here we have only three types or three categories of working capital are there. So we'll see one by one. So working capital, in that we have permanent working capital, second one temporary working capital, and third one is semi-variable working capital. So these are the three types of working capital are there. So we'll see one by one. What do you mean by this permanent capital or permanent working capital? What do you mean by this temporary working capital and when it is required, and semi-variable working capital? Okay. So first one, permanent working capital. It is also known as fixed working capital. So the word only indicates permanent. So that working capital or whatever the fixed money is maintained for the working capital requirement, that will be the permanent. So for 1 year, if the company wants to spend 1 lakh rupees on its working capital, means that will be permanent. They are going to manage the same 1 lakh rupees all over the year or throughout the year. That is permanent working capital, or it is called as fixed working capital. So it is the capital. The business concern must maintain certain amount of capital at minimum level at all the times. So I've given the example, right? So 1 lakh rupees, the company minimum they need to maintain this working capital throughout the year. So financial year start from 1st April, correct? So from 1st April to next year 31st March, they need to maintain this 1 lakh rupees as it is. So how much is required they are going to take, and they are going to load that money for that particular thing. 1 lakh rupees they need to maintain as a working capital. So that is the permanent working capital at all the levels. Okay. The level of permanent capital depends upon the nature of the business. So permanent or fixed working capital will not change irrespective of time or volume of sales. If for example, for that also we have some criteria. Okay. So per month the company is going to produce 10,000 number of units. So all the throughout the year, so throughout the 12 months they need to produce 10,000 only. So if they increase the number of production or number of units production, then it may be vary, correct? So the same amount of products they need to produce continuously, then only it will be applicable, or volume of sales, or irrespective of the time. So due to the time constraints, so due to this pandemic situation, all the companies, okay, they are under loss. Why? Because they have not do any operational activities, correct? So this COVID also affects organizational working capital. Second one, temporary working capital. So the word only indicates temporary. So whenever they require this temporary working capital or working capital requirement arises, then they are going to use this temporary working capital. So it is also known as variable working capital. Okay. It is going to vary from the month to month or quarter to quarter or for year to year, depending on the whatever the number of products they are going to produce or whatever the activities they are going to do. Depending on that, it is going to vary. It is the amount of capital which is required to meet the seasonal demands. So some companies will be there, or some manufacturing units will be there only in the season. Okay. If the raw material is available only in that particular season, means in that season only they are going to run the organization. For example, only in a year 6 months the production activity will be is going to run. So other 6 months they are not going to do any operational activity. So on that time they require this temporary working capital. Okay. Seasonal demands and some special purposes. Okay. Only seasonal demand is there, or any some other purpose will be there. On that time only they are going to take this temporary working capital. So it can be further classified into seasonal working capital and special working capital. So seasonal, I've already explained you. So only in the season, wherever the or whenever the raw material is available for the organization, so on that time they are going to do this, or they are going to use this temporary working capital. Or for special working capital. Special, due to this pandemic situation, all the medical companies, they are going to use this special working capital. Why? Because they have to produce more number of mask, sanitization or sanitizer or any other medicines, correct? So for that purpose they can use this temporary working capital. Okay, under temporary capital we have two categories, that is seasonal working capital and special working capital. And the last one, semi variable working capital. So in this semi-variable, certain amount of working capital is in the field level up to a certain stage, and after that it will increase depending upon the change of sales or time. So semi-variable working capital is, it is not going to fixed. Okay, so depending on the quarterly wise or depending on the monthly wise, okay, they are going to change this working capital. So that is called semi variable, depending on the time or sales or whatever the other activities are going to do in the organization. So it is going to depend on the time. So next topic, factors determining or influencing for working capital requirement. So what are the factors or whatever the determining factors or influencing factor for this working capital? We'll see. First one, nature of business. So the nature of business is nothing but whatever the activities in the organization or what kind of raw material they are going to use and what is the process they are adopted. Okay, all those will be comes under the nature of business. So depending on the nature of the organization, okay, so if they required huge number of raw material, okay, take the example of producing the cloth, okay, textile industry. So they required jute or cotton. For that then required coloring or whatever the machinery they required and other ancillary products they required for producing the cloth, correct? So the textile industry, they required huge raw material. So if they want to purchase this huge raw material, yes, they require the working capital also. So it will affect or it will influence for the working capital for the organization. Second one, production cycle. In this production cycle, what is the turnaround time or how much is required for one cycle? Okay, starting from raw materials to finished into finished goods, or we are going to get the output. So for that, how much the cycle or how much the time is required or duration is required, depending on that also it will affect the working capital requirement. So the processing stage, okay, they need to pay electricity charges, water, fuel, coal, gas, wages, okay, and other required goods or required services also they need to take, correct? So on that time this production cycle will also affect the working capital, and after that cycle again they need to repurchase the raw material, correct? So if they want to purchase the raw material, they need to clear all the other whatever the debts are there, okay, they need to repay. For that they require working capital. So next, business cycle. So business cycle is nothing but the company, it's in an introduction stage or it is in a growth, maturity, decline. In which stage the company business cycle is there, okay, that is also affects the or that is also influence the working capital requirement. So if it is in the introduction or in the growth stage, so on that time they required huge working capital. For example, they need to purchase raw material and they need to first they need to produce the goods and services and they need to distribute as a free sample and they need to collect the feedback on the goods and services. That is, they need to do the survey and they need to spend so much of money on the promotional activities. So all those things they required this working capital. So depending on the business cycle also, it will influence the working capital requirement. For example, it is in the maturity stage. So in the maturity stage, we have huge demand for our products and services. So for that huge products and services, we need to produce. We need to meet the demand means we have to supply, correct? So for that supply, we need to produce the goods and services. So that required working capital. Okay. Next, production policy. So the company production policy is also affects or it is also influence the working capital requirement. So what is the production policies are there? So they have this much of goods we need to produce per day or whatever the cycle is there. Depending on that also they need to decide this working capital requirements. Credit policy. So you already known credit policy is nothing but how much the credit is allowed by the creditors or our suppliers. So, and how much we are allowing for our customers, that is our debtors, because we need to sell goods on the credit. Then only the customer will purchase. No one or all who are going to purchase, they are not going to purchase for cash. Some people or few customers will purchase on the credit also. So, we need to allow credit period also. Next, growth and expansion. So if they want to growth or if they want to expand the business means yes, they require huge working capital because they need to start new product line or they need to start a new plant or new branches. Okay, for all those things, yes, they require this working capital requirements. Next, seventh point, availability of raw material. Depending on the availability of the raw materials is also influence the working capital. So if for example the raw material hugely available, okay, or the supply is heavily is there in the market, so on that time, yes, we can easily get the raw materials with a cheaper price with a good quality, correct. But if the demand is there for that raw material, yes, then they need to spend huge money on the raw material only. Why? Because the huge demand is there and supply of that raw material is very less. So on that time, they need to pay more money. So they required working capital. And the last one, earning capacity. So the company's total earning capacity, it is also influence the working capital because if they want to increase the more profit or if they want to earn more money means they need to spend more working capital on the day-to-day activities. Then only they can get the more profit. So these are the 8 factors are influencing for the working capital requirement. Operating cycle. So this is very, very important for all the business, okay, or all the organization for the managing the working capital or working capital balancing in their organization. It is very, very important. So these are the few process are there in the operating cycle. So this one turn we call it as one cycle. Okay. So first, raw material. So raw material is nothing but we have going to purchase the raw material from our suppliers on the basis of cash or on the basis of credit we are going to purchase. And if we purchase for cash, yes, definitely on that time only we are going to repay. If it is credit period, yes, whatever the creditors or suppliers allow for us to repay the money on that particular time, we need to repay the raw material cost. That is the first process or first step. So second one, once we purchase the raw material, what we are going to do, we are going to start processing that raw material. Okay. So once it is in the process, we call it as work in progress. The raw materials are converted into finished goods. So in that particular stage, we call it as work in progress. After this work in progress, we will get the finished goods. Okay. In the finished goods stage also, the working capital is required. Why? Because once we get the finished goods, again we need to sell it to our customer and we need to give some promotional activities or we need to give the advertisement, free samples. For all those things, yes, we require working capital and we are going to give it to the debtors. So if it is sold to the customer, yes, we are going to get the on spot cash. If you given for debtors means we are going to sell goods on the basis of credit. So we are going to allow some number of days for this debtors to repay the money for the organization. The debtors is going to repay the cash on that particular day. Okay, whatever the due date is there, after the due date he is going to pay the cash. Again, we are going to purchase raw material. Same cycle will be repeated. For example, first day we are going to purchase the raw material, correct? So once we send the raw materials for the work in progress stage, it is required 2 days. Okay. So from this work in progress to finished goods, we are going to get in the 1 day. So total 3 days, correct? So after getting the finished goods, we need to sell it to our customers. So for selling that goods, we require 10 days. So 3 plus 10, 13 days. So these debtors, they are going to purchase goods on the basis of credit. So company allowing 15 days of credit repayment period. So 15 plus 13, 28 days. After 28 days, we are going to get the cash. Whatever we have invested here, we are going to get after 28 days. Correct? So this is the operating cycle. Based on this, the companies will maintain the working capital. Formula for calculation of working capital management. So for calculating this working capital management, formula is equal to R plus W plus F plus D minus C. So we'll see one by one. R is equal to, that is raw material, is equal to average stock of raw material divided by average raw material consumption per day. Okay, per day information, we are going to calculate R. So we are going to get one number plus W is nothing but work in progress. So average work in process or progress inventory divided by average cost of production per day. So we will get one number for work in progress plus for finished goods, average finished stock inventory divided by average cost of goods sold per day. So per day, how much sales they are going to sell or how much goods they are going to sold per day, that information. So we are going to get the finished goods. So next, debtors. So average book debts divided by average credit sales per day. So per day, how much credit sales they are going to make and what is the total debt. So in that we are going to get D, that is debtors. And the last one, we are going to deduct C, that is average trade creditors divided by average credit purchase per day. So the company is going to purchase on the basis of credit from the supplier, correct? So that they need to repay, that we need to deduct. Okay. In the operating cycle also I've given the example. For raw material 1 day, we work in progress for 2 days, finished goods it is 3 and debtors it is 15. And whatever the credit repayment period is there, that we need to deduct. This is the formula for calculation of working capital management. Okay, next topic, sources of working capital. So sources of working capital, we are going to broadly classify it into two categories, that is internal sources and external sources. So we require money for the day-to-day activity that we can get through the internal source or to the external source. So we'll see which are all comes under the internal source and which are all the available for external sources. So in the internal, first one, retained earnings. So retained earnings is nothing but the company is going to retain some amount of profit for every year. For example, the company from the last 10 years, they are making good profit. So what they are going to do in that last 10 years, they are going to keep some percentage of amount as a retained earning. So that can be used as a working capital without going for a borrowing money from the other financial institution or from the bankers. Okay, they can go with this retained earnings. That is the one internal sources of the working capital. Second one, reserves and surplus. So the companies will maintain reserves for the future. Okay, whatever the uncertainty will be there or uncertain activities will be there. For that, they are going to maintain some reserves in the organization. That reserves they can utilize. Or the last year profit, that we call it as surplus. So if the surplus is there, that surplus money they can utilize as a working capital. And the depreciation fund. So the companies, what they are going to do, they are going to deduct the fund from the balance sheet, from the concerned assets, depreciation. But they are going to keep that money as a depreciation fund, and that amount will be utilized to purchase the new assets to the organization. So what they are going to do, that money also they are going to keep it as a reserves, correct? So that depreciation fund also can be utilized as the working capital. So these are the three internal sources are there. Next, external sources. So in the external sources, first one, debentures and public deposits. If they require the money, so they can go with the issuing the debentures or they can go with the public deposits and they can collect the money for the working capital requirements. Next, loans from banks and financial institution. So if they require money, they are going for this loan or they are going to borrow the money from the banks or commercial banks, or with the financial institution, they are going to get the working capital requirements money. Advances and credit. So advances, they are going to take the advances from the customers or from the other stakeholders. They are going to collect the advances, or they are going to collect the credit, or they are going to take the credit from the other people like family members or friends or any other person. They are going to take the credit. And the last one, financial arrangements like factoring. Okay, so factoring is nothing but it is an agent, or it is a act as a agent between the company and the banker. Okay, whatever the vouchers or bills receivables are there, we are going to submit and we can get the money from the organization or from the financial institution. Okay, they are going to cut, or they are going to deduct some percentage of commission, and they are going to repay the money. That is the factoring. So these are the few sources of working capital. So next, how to manage working capital. We have so many points are there, but it is very important. These 5 points are there. How to manage this working capital. So first one, being proactive. So if first stage is we need to plan, correct? Once we get the plan, or once we get the estimation, yes, we need to proactive with the getting the money, or we need to arranging the money. That is the being the proactive. Next, not mixing personal and business expenses. Okay, so as per the accounting concepts and conventions, yes, we are not going to, or we are not eligible to mix the personal expenses and the business expenses. Personal expenses is nothing but the proprietor's personal expenses. It cannot merge with the business. The personal, that is proprietor personal, is different, proprietor organization is different. So we need to maintain separate expenses. Next, making payments on time. Okay, for a creditors or for any bankers. Okay, if we repay on the particular whatever the due date is there, okay, if we pay regularly, then they are going to allow number of days, extra number of days, or they are going to give discounts. Okay, so for that purpose, yes, we need to make sure that all the payments will be done on time. Next, proper invoicing. So we need to maintain all the proper invoicing for the day-to-day wise. Okay, and the last point, choosing the appropriate source of funding. So we have internal and external funds are there. Okay, we need to select which is better, or which is optimization, or which will be the optimum, or it is suitable for our organization. We need to select that one only. So in this session, we have discussed about introduction to working capital. That is like working capital is a blood for all the business activities. How the blood will work for human bodies, like that the working capital will work in the organizations also. Okay, in a simple, all your current assets minus current liabilities, that is your working capital. Definition is, that is also, the working capital refers to firms' investment in short-term assets, cash, short-term securities, accounts, receivables, and inventories. So all about your current assets and current liabilities. Next, the meaning and definition of working capital management. So attempting to manage the current assets and current liabilities and the interrelations that exist between them. So the managing the current assets and current liabilities in the organization, that is called as working capital management. Next, objectives of working capital management, that is balance of working capital expansion, healthy relation with the suppliers, optimization of working capital management, minimization of cost of capital, assist the business to avoid over borrowing, optimal return on current assets. Importance of working capital management: higher return on capital, improved credit and solvency position, higher profitability, better liquidity, uninterrupted production activities or production process, competitive advantage, appreciation of business value. Aspects of working capital: the three elements of working capital, that is accounts receivable, accounts payable, and inventory management. So types of working capital: permanent working capital, temporary. In this temporary, we have two categories, that is seasonal and special working capital, and the semi-variable working capital. Factors determining or influencing for working capital requirement that we have discussed: operating cycle, that is raw material, work in progress, finished goods, debtors, and cash. So these are the operation cycle or turnover cycle is there. Formula for calculating the working capital management, that is raw material plus work in progress plus finished goods plus debtors collection period minus creditors repayment period. Okay, that is your working capital management formula. Sources of working capital, that is internal sources and external sources are there. How to manage the working capital in an effective and efficient manner. Thank you.
If you haven't subscribed to our channel yet, I want to request you to hit the subscribe button and turn on the notification bell so that you don't miss out on any new update or video releases from Great Learning. If you enjoyed this video, show us some love and like this video. Knowledge increases by sharing, so make sure you share this video with your friends and colleagues. Make sure to comment on the video for any query or suggestions, and I will respond to your comments.